Robinhood has become the go-to investing app over the past couple years for the younger generation, mostly due to its free trades and its snazzy user interface. However, that snazzy user interface is the same thing that is drawing a lot of criticism from the media and from regulators.
Massachusetts regulators are accusing Robinhood of what they call aggressive tactics in marketing inexperienced investors, using gamification to manipulate those customers.
The main concern is that the app gamifies investing. It subtly encourages users to engage in more frequent trading than they normally would. And when you're trying to be a responsible investor, that's a serious problem. As people have learned from free social media apps, whenever something is free, that usually means that you are the product. And Robinhood is no different. But that doesn't necessarily mean that you shouldn't use the trading platform. In fact, there are a lot of benefits to using Robinhood over other trading apps that I'll cover in this review. What's up, guys? It's Jeff from Dollar Sprout. Welcome to the channel where we teach you all about how to make and save extra money and maximize your earning potential. If you haven't already done so, we'd love it if you would subscribe down below. Thanks. Launched in 2013, Robinhood is a commission-free trading app that allows users to trade stocks, ETFs, options, and cryptocurrency. The app offers individual brokerage accounts as well as retirement accounts like traditional and Roth IRAs. They offer a Robinhood Cash Card as well, which is a debit card that can help users grow their balance by essentially rounding up their purchases to the next dollar and investing that spare change into their portfolio. Kind of similar to how Acorns works, if you're familiar with that. There is no minimum opening fee for brokerage accounts, and if you want to open up a margin account, you'll need $2,000. That's not a Robinhood specific rule, that's actually a government regulation. Robinhood is a member of SIPC, which protects its members up to $500,000 and up to $250,000 in cash claims. But keep in mind that this only protects your assets should Robinhood become insolvent. It doesn't protect you if your investments decline in value. Investing always comes with the risk of losing money. Now, there have been a few instances where Robinhood has had outages.
Trading app Robinhood suffered a second outage yesterday. That app was down throughout Monday, leaving users unable to take advantage of the largest ever point gain in the Dow, and was fully operational by noon yesterday as stocks fell after the Fed's surprise rate.
Filing lawsuits. The company was almost immediately hit by lawsuits from customers on Thursday after it restricted these transactions on certain stocks, including GameStop. That was following this run-up by the Reddit-inspired traders.
There's just something to be aware of. Again, this doesn't happen very often, but when it does, it can be very painful for investors that want to make a move but can't because they're essentially locked out of trading that asset. All right, so you're probably wondering, if trading is free on Robinhood, how do they make money? So Robinhood is able to offer free trades to its customers because Robinhood is actually making money from market makers through a process that's called payment for order flow, or PFOF. And payment for order flow is the routing by a brokerage firm of trade orders to specific market makers for execution. Payment for order flow involves Robinhood directing its customers' trades to third-party market makers in exchange for a fee. These market makers, in turn, execute the trades and often provide a small payment to Robinhood for each transaction, something like a fraction of a penny per share. While this allows Robinhood to offer commission-free trading, it raises potential concerns for investors. So one significant issue is the conflict of interest, right? So when you think about it, Robinhood's revenue is tied to the volume of trades that are made, not necessarily on the quality or the success of the trades. As one would imagine, this setup can actually incentivize Robinhood to, increase the volume of trading because, that's how they make more money. The more trades, the more money that Robinhood makes. But that's not necessarily what's in customers' best interests. So there's also the question of whether customers are actually receiving the best possible execution price on their trades. Now, since Robinhood is directing their trades to a specific market maker, that doesn't necessarily guarantee that customers will get the best price. In fact, the SEC fined Robinhood $65 million in 2020 for failing to properly disclose payment for order flow that resulted in trades that weren't executed at the best price. So a lot of people like to rip on Robinhood for this payment for order flow model, but in my opinion, it's really not a big deal, especially when you're getting your trades for free. And often, when you have a trade that's executed at slightly suboptimal price, it's not enough to materially affect your returns. I think the bigger issue with payment for order flow is the incentive that it creates for Robinhood to essentially encourage you to engage in trading more frequently. I think that is the bigger thing to be concerned about with Robinhood in particular. And I think if you do decide to download the app, just be cognizant of that fact that, this app, the way they've designed it is in a lot of ways different from many other investing apps. And it's really designed to be fun and engaging for the user, which sounds good. But in reality, investing should be very boring. You shouldn't be, checking your Robinhood app or your E-Trade app or whatever app. You shouldn't be checking it every day. If you're doing investing right, you check it, maybe once a month, once a quarter, something like that. So just something to keep in mind. Opening an account is really simple and straightforward. It just takes a few minutes. They'll ask you for information like your name, your date of birth, and they'll even ask for your social security number. That's a normal thing. That's a requirement in the United States, is to submit your social for any investing account that you have. And Robinhood gifts new users a free stock anywhere between $5 and $200. It's essentially a gift card that you can use to purchase from a list of 20 different stocks within the Robinhood app. So that's a neat way to get started, especially if you don't have a lot to start with. Robinhood kind of just throws you a bone and gives you something to play around with at first. So that's really cool. Now, according to Robinhood's website, it says here the cash value you receive could be anywhere between $5 and $200. Keep in mind that approximately 98% of participants will receive a reward having a value between $5 to $10. So in other words, don't get your hopes up for the $200 bonus, but still, it's a neat feature. One other neat feature that Robinhood has is they allow you to purchase fractional shares of a stock. So what this means is if you don't have enough money in your account to buy a certain stock that you want, let's say Apple, for instance, right now it's trading at $196. Let's say you only have $50 in your account. Well, with fractional shares, you can use that $50 and buy roughly 25% of one share. So that's a great way to, get your money to work for you faster rather than, wait until you save up that $196 until you can buy one share of Apple stock. So that's a really cool feature that I think a lot of people like having in their account. Robinhood also gives users the option to engage in pre-market or aftermarket purchases or sales of stock, which to some people is a really enticing feature, although it does come with additional risk because in those off-market hours, there's often less liquidity, which can mean bigger price fluctuations. But if you want the flexibility to basically trade whenever you want, then this is a good thing. And speaking of things that I would stay away from if you're a new Robinhood user is trading on margin, which is a fancy way of saying, borrowing money to invest. And that is a dangerous thing. It can basically, let's say you have $2,000 in your margin account. What you can do then is you can borrow against that $2,000 and get essentially another $2,000 to invest. So your $2,000 account becomes $4,000 worth of trading power. So it basically will make your profits twice as big, but it will also make your losses twice as large. So it's very risky. And also when you are trading on margin, when you borrow that money to invest or to trade, Robinhood will charge you interest for that. I would encourage people to just not participate in that. It's a good way to just get caught up in, trading more than you should. I'm a big believer in, you should invest within your means and within your risk profile. And there's just no need to take on this extra risk with a margin account. However, one perk of the Robinhood margin account, or it's also called Robinhood Gold, is that for any uninvested cash in your account, you'll earn a 5% annual percentage yield. So that's actually in line with some of the top online savings accounts. So that's a good thing, but I think it's still not worth it if you are, using that margin consistently and incurring interest from the margin loans, and then also increasing your risk with the investments that you're making with those margin loans. Okay, one thing I do want to caution against: when you sign up for Robinhood, inevitably you're going to come across the option to buy or sell options, which are a different kind of trading instrument within Robinhood. And these are very, very, very high risk investments that, I've seen a lot of people lose their entire account in a matter of literally minutes. So it's something that, unless you are you really truly know what you're doing with options, I would say stay away, because you can blow up your account extremely fast. Just please don't do it. All right, got that out of the way. So if you're about to download an investing app and you're doing your research correctly, you probably came across several other investing apps in addition to Robinhood that you are considering downloading. So I'm going to give my thoughts on a few of the top competitors to Robinhood and which ones I think are best. Okay, so there's two big differences between Robinhood and Acorns. The first one is Robinhood is free, whereas Acorns starts at $3 a month. Now, $3 a month doesn't sound like much, but it can actually be a huge percentage of your overall portfolio if you're not investing a large amount of money. So I would say, unless you're investing at least $5,000, I would say stick with Robinhood, unless you just really want to use Acorns. The other big difference between Robinhood and Acorns is Robinhood does not have any pre-made portfolio options, whereas Acorns does. Acorns, you can fill out a little questionnaire and they will actually recommend a portfolio to you. Robinhood doesn't have that feature. So if you are a true beginner and you have no idea what you are doing when it comes to investing, and also you don't have any desire to learn, then I might recommend Acorns over Robinhood. But if you're willing to put in just a little bit of time to understand how to build even just a basic ETF portfolio, then I think Robinhood is probably the best option. Both Robinhood and M1 Finance both offer commission-free trades. M1 is more focused on overall portfolio management, and in fact, they do offer model portfolios for customers to invest in, and then M1 will go and put that money into a predetermined portfolio. So that is a very nice option that Robinhood does not offer, and with an app like Acorns, you have to pay for that option. And M1 also offers a separate high yield savings account, which is really nice. The difference is, so Robinhood offers a savings yield on uninvested cash balance, but it is still within your investing account. Whereas with M1, you have a separate standalone high yield savings account, which is nice to just kind of keep things separate. That's how I prefer to do it. I don't like to think of the cash balance in my investing account as savings. I just think of it as, that's money that is going to be invested at some point, just not right now. Whereas with M1, it is a separate savings account. So both of these factors slightly tilt my opinion towards M1 Finance over Robinhood. I think that you can't go wrong with either one, honestly. I'd say Robinhood is ideal if you want a very hands-on trading experience and you are, looking to be more active in your portfolio, whereas M1 Finance is probably better for the more traditional hands-off approach to investing. So I'd say in this race, I'd say M1 wins by a small margin, but it's a close fight. Either app is good. So E-Trade applies to a little bit broader spectrum of investors, from beginners to definitely on the more advanced side of traders. So with E-Trade, you can invest in all the same stuff that you can with Robinhood, but you can also invest in mutual funds. You can also buy bonds within E-Trade. Whereas with Robinhood, you can buy bond ETFs, but you can't buy bonds directly by themselves. I think for beginners, Robinhood is probably the better option, but they are both quite similar. So I'd say it's a tie between these two. So Robinhood is a solid product, and in my opinion, it is very suitable for new and even experienced investors who want a little bit more of a hands-on approach to managing their portfolio. The commission-free trades and the easy-to-use interface are both great features, but always remain cautiously on guard. If you find yourself getting hooked on the app, take a step back and reconsider what you're getting yourself into. Investing is a long-term game, and if done right, it should be boring.